Okay, so how to buy your first rental property with no money. So I know a lot of people want to be a landlord, but they're just low in funds. They don't have a lot of money. You're not alone. So this video, we're going to crack the code on buying your first rental property in 2024, even with no cash or limited cash. So hey, listen, I was once in your shoes, but guess what? I built a successful real estate portfolio, and now I'm here to share my secrets and help you avoid the costly mistakes that I made. So the no money down method to buy property is true. You can do it, and you can use it to buy property. I did it, and so can you. So we'll explore realistic strategies for financing, finding the right property, and saving money on your investment journey. Okay, so listen, everyone, I know you've heard this 1,000 times. This is not a get-rich-quick scheme, okay? But with the right approach, real estate can be a powerful tool for building wealth. So are you really ready to unlock your real estate investing potential? And so let's get started. So real estate can be a fantastic way to build your wealth, like we've mentioned. But let's be honest, there are traps to avoid. Now, I use rental income to gain wealth and have extra cash flow monthly. Just so you know, it wasn't an overnight success story for me either. I spent 30 years building up my portfolio. So let's break it down. Cash flow is the key. Your tenants pay the rent, which helps you cover your mortgage. But remember, location also matters. Now, I discovered later in my real estate journey that you should invest in areas with rising property values. The appreciation in that rising area means you can eventually sell for a really big profit. So in this video, it's all about the reality of owning rental property. Rental properties can be a path to financial freedom, but it takes strategy and effort. Rental properties are fantastic for, generating income, but have you considered their true wealth building potential? Selling them later can be a game changer. So let's explore how to maximize your returns. Okay, number one, invest in appreciation. So location is really a big factor. Research areas with rising property values. Look for factors like strong job markets or growing populations. So you really want to buy smart, renovate strategically, and then invest in updates that really enhance the curb appeal and long-term value of that home. You got to really think kitchens and bathrooms, and then anything that's energy efficient. So number two on the list is track your expenses and maintenance. I track this stuff to the T. You have to have meticulous record keeping is going to be crucial. Track all the repairs, upgrade, and property taxes to maximize the deductions at tax time. Okay, number three, the power of asset leverage. So don't sell, leverage. Use your appreciating rental as collateral for a loan and invest in more properties. This stacking effect can exponentially grow your portfolio. Now, I did this on my first home that I bought with my parents when I did my first investment property. I took money out of that home after 2 years of appreciation, and I used it to buy a duplex a few streets away from that first home. 2 years later, I sold that duplex and made a $44,000 profit. Okay, number four, consider your exit strategies. So you want to sell for top dollar, right? Time your sale for a favorable market like it is right now. I mean, selling your home right now, you can get great prices. Hire a skilled realtor who specializes in your area. Okay, passing the torch. So gifting a rental property to children provides them with a valuable asset and future income stream. So think about that as an exit plan. Remember, this is a really long-term game here. Be patient, invest strategically, and then just build your wealth with the rental properties. So you might be dreaming of owning rental properties, but are worried you can't afford it. There's a way to get around that, and that's by using other people's money. It's called OPM. So hold on. Doesn't that mean using mom and dad's cash to do this? Well, not always. I did do that my first home. I used my mom and dad. They helped me with my first rental, And then, we went into the deal 50-50 partners. In the end, it really worked well for my parents because when we sold that property, we made a $69,000 profit that we split. Okay, so let's break down your OPM options for beginners. Banks. Traditional lenders offer mortgages to qualified buyers, so you need to work on your credit score to really get the best rates for this method. The next method is hard money lenders. Now, these lenders specialize in short-term, high-interest rate loans for fixer-uppers. Key there is high interest rates. The idea is you fix the property, refinance it to get out of the high interest rate with a lower interest rate, the banks, and then keep that cash flow. Okay, so next, here's a powerful strategy using OPM. It's called buy, rehab, rent, refinance, and repeat, BRRRR. So number one, buy. Find a property with a good price, even if it needs work, like bank-owned or foreclosed, and then secure a hard money loan. Second, then you rehab the property. So fix up the property to increase its value. This can be anything from, painting to major repairs. Focus on improvements that attract good tenants and boost the rent prices. So here's the key. You'll need financing for this stage. Hard money lenders specialize in short-term loans for fixer-uppers. They typically have, like I said, the higher interest rates, but they move quickly, which is key for picking up discounted property. Okay, 3 is rent. Find a tenant and start collecting rent. This income helps pay your mortgage. Okay, number 4, refinance. With the increased property value, refinance into a traditional mortgage with a lower interest rate. This cashes you out. You get the difference between the new loan and the old one. And then number 5, you just need to repeat it. Just do it all over and keep repeating. Use the cash you gain from the refinancing to invest in another property and repeat the process over and over. This is how you build your rental property portfolio without a big chunk of cash up front. Remember, OPM is a tool, not a magic trick. Research financing options, understand the risk, and always consult a professional before investing. Okay, if you're ready to learn more about OPM and real estate investing, let's talk about finding amazing deals on properties and securing that funding. Okay, the key is to find motivated sellers. These are people who need to sell their property quickly, often for less than market value. Now, here are some reasons sellers might be motivated to get rid of their house. The property needs repairs, so maybe they can't afford to fix it up themselves, and this is an opportunity for them to sell, get their equity out, and move on. They have financial difficulties. Maybe they're behind in their mortgage payments. They're facing foreclosure. They got a divorce. The list is endless. So they might be willing to sell at a discount to avoid further stress. You also have bank-owned properties or properties already foreclosed on that are on the market. I bought several deals this way and made a fortune. The house I currently live in is bank-owned home. When I bought it, it was bank-owned, and it was in a really great area of the city. So you can find foreclosed bank-owned properties in great areas of different cities. Now, how do you find the motivated sellers? That's really the key, right? You got to do a lot of legwork. You got to network, attend real estate investor meetings, connect with local agents. You got to let people know that you want a deal and that you are ready to go now. Look for probate or foreclosure listings. These can be great sources of motivated sellers. Like I said, I found a bunch throughout my career. Use a realtor to send you listings in your area. I did that, and I found a lot of properties that way. Now, finding the money, you won't be using your own cash like we've said, right? So this is no money down. So we're going to explore all the different funding options. We've already talked about a few. One of them, hard money lenders, right? These lenders are, like we said, short-term, high-interest loans for fixer-uppers. Perfect if you're going to get in and move quickly. Then you've got private money lenders. These could be individuals or groups who invest in real estate projects, and they'll expect a good return on their investment. And then you've got friends and family, and I would only use friends and family to start and then go with the banks and then the hard money. Now remember, finding deals and funding takes effort and research, but by combining your deal finding skills with the right funding sources, you can buy rental properties with minimal upfront investment. Now, hey, hope you found this video helpful. Please give it a thumbs up, hit the subscribe for more videos on wealth building, real estate investing, and making money, and let us know your thoughts in the comments.